Hey traders, it's Dennis Wilburn, the AutoPilot trader, and I'm going to share something special with you guys today. It's 4 lessons I learned that helped me survive as a naval aviator in the United States Navy that can help you become a better trader. Plus, I'm going to share 2 stocks with you today, and I'm also going to give you a forecast of where the S&P is likely to go. And when it's going to get there, you're going to be surprised. So let's click in, and as I also like to say, let's buckle up and get ready for takeoff. We're ready to go with Trade Your Way to Wealth and Financial Freedom. Hey folks, before we continue on with today's session, remember, subscribe, hit the bell to be reminded when we post new stuff. And leave some comments. Basically engage with me. Let's help drive the algorithm and get the message out to more and more traders about autopilot trading and market tech talk. Thanks a lot. See ya. Good afternoon, everybody. This is Dennis Wilburn, the Autopilot Trader. I want to welcome you to today's session of Trade Your Way to Wealth and Financial Freedom. Have some exciting things to be chatting with you about today. And as we said, I said in the intro, I've got 3 lessons, or actually 4 lessons I learned when I was going through flight school to become a naval aviator or a naval jet pilot that I'm going to share with today that are very applicable to trading stocks. So before we kick off, and we're going to jump right into the analysis of the market in one word. How would you describe the current market? Anil, what's your one word?
Challenging.
Challenging, okay. Bad, Steve says bad. And if you're joining us over on the YouTube channel, just go ahead and tap it and put it into the chat box over there also. I'd appreciate it. Finicky, that's a great one. My word for this week was becoming rational. Okay, choppy. Yeah, my word for this week regarding the market was nasty. Just nasty. Some of the trades we made first part of the week, got into them. They basically ripped up and ripped down, took us out, and then all of a sudden, if we would have, again, if we wouldn't have followed our rules, we'd still be in the trade and they'd be profitable because we're trading downside leverage ETFs. However, I'm not going to violate my own rules. That's a good way. That's one of the things I learned from aviation. Brutal. So, Anil, you mentioned you had a safety tip. Is this like having to do with the holidays, or what's up with that?
No, it's if you do not have a carbon monoxide detector in your home, get one. We had a close call. Make the long story short, we are okay. The
Good.
detector did its job, and this detector was 10 years old. So first I didn't believe it, which was the wrong thing to do.
Right.
But had another one, and both of them were giving the high reading. So we got out of the house, spent a couple of nights with my son. Back at the house now, everything is cleared up, but we have no heat.
So was it a leak in the gas or something?
Heating furnace.
Okay. So no. Thank you very much. I know that some places, like in California, you have to have one of those. You have to have one of those CO monitors in your house to do anything with it, to sell it or anything like that. Not that way over in Hawaii, but I really suggest that it's not a bad idea to have one of those for Hawaii. One of the things that we kind of don't have some of the same threats over here, in that I know we're open air almost 95% of the time over here. So David almost lost his brother and his whole family about 10 years ago due to CO poisoning. Wow. Thank you, Anil, especially this time of year, because for whatever reason, when you get close to the holiday seasons and Christmas season, oftentimes that's a time when bad things happen. So, hey, just remember, all materials we do present are for training purposes. Traders should always pay for trade any new method prior to the risk of their own personal performance. Here's where I'm sitting as of about 9 o'clock this morning, and there's where we were last week. In fact, I'll just grab the the document over here. And here's where we were at as of about 9 o'clock this morning. Notice that, I took a little bit of a hit down to 39%, 37% versus 39. But look what's happened over to the indexes. The indexes, the S&P, the NASDAQ, and the Dow, the Russell, all down in bear territory from the high. That is the S&P slipping back into bear territory, and the NASDAQ, that's looking ugly. I mean, that's almost 33% correction since the high from last year. And so something to just be on the lookout for. Great news. What we're going to be covering today, though, is I'm going to show you, utilizing the Fibonacci's, what we might expect off of the spiders. And I'll just give a quick overview here. Look what's happened with the spiders this week. And this is where I was saying this has just been one heck of an ugly week. Okay, that was Monday. We're going, okay, it looks like we're going to bounce back up. Now, I didn't take any action on Monday with the exception of, I said, that might, be going to trick us, and we might want to take a downside trade. However, we get a big gap up on Tuesday morning. That was the day that the CPI came in a little bit tamer than expected. However, it's selling off as hard as it did. That made it suspect that we could have some challenging headwinds going through the rest of the week. And sure enough, that was Tuesday. Wednesday, as you see, the Fed comes out. Actually, still not breaking down yet, but the Fed said, hey, it looks like we've got a long way to go here. It's going to be kind of ugly going into 2023, which it could very well be. And then it starts breaking down on Thursday, and again, more today. These are significant gap downs. What has happened with the indexes that we need to be aware of is, one, where we were in a nice little, intermediate term or short-term uptrend, that swing low right there. As soon as we took that out, that kind of changes the complexion of the market. We've taken that out. We're below all the moving averages, including the 200-day moving average. So on the spiders, and also the other indexes, I'm looking basically for a move back up into the moving averages, and that could be the 50, that could be the crossed over 820. But somewhere, let's say about the 395 level, that's where we may get an opportunity to take a trade back down to the downside. And if you take a look on that, where is that approximately? Well, there's the 50-day moving average. So that's about the 391 level. What we may see next week, though, is just a move back up to about 388. That's where I would put in an alert at 388. And once prices get up into there, that's when I'd be looking for a potential reversal or a stalling out of the market. So that's what we have going on with that. Now, the fun part is, where's it going from here? Clearly, these lows that it hit right here at about the 369 and also the low here at the 348, those are downside targets if we do get into a short trade, or if we're trading the leverage inverse ETFs. Let's take another look at, well, where's it likely to go? And the best way to do that is take a look at the Fibonacci extensions. I want to go, will it have a symmetric move from here to here, and also then from here to here? So just, I throw in here and go, there's my potential move. And if I pull this down just a little bit, a 100% symmetric move would, would take us down to the 326 level, 326. And so I like to isolate or highlight with that somewhere between the 78% retracement and the 100%. And I could actually go down a little bit further, but I'll just highlight the top side of that. And I'll just draw in a little box right there for the time being and say, that's where I would expect things to go. Now the question is, when will it get there? And that's another important, aspect of our analysis is when. When I want to know I take a look at, well, what is my time extension, Fibonacci time extension? And I want to follow the same price pattern here. So from that high to that low, back up to the high of this week. And now that gives me this, there we go. The purple line there is the 100% time extension. And so what I'm looking at somewhere between that front line right there, which is a 78% extension, and the 61%. Did I do that right? Yeah, that's right. Okay. Is where I would expect it to be down in this area. That gives us some target or some ideas that we can plan our trades around. And so what this is telling us is saying, hey, I may want to wait for it to get down here. So what are those dates? The first date is the 20. This is the weekly chart. So the first date is 1/28/23. Second date, the week of the 9th of February, and the outside one is the week of the 25th. And so if you've never used these tools to kind of give a projection of where things are going, it's a great way to just get an idea. Do they work out every time? Of course they don't. I mean, that's like anything else in the market. But what I can do, excuse me, what I can do is go back and take a look at and say, okay, the last time it did this, which would be where it touched here and came down to here, came back up to here, how close did my low come to that, to that little box? Well, right there. It was like a week out. It hit its low and then bounced back up. What about my downside price projection? Well, similar type situation. How close did it come? And this is where you want to verify every time. And again, my downside projection was here, 331. And how far down did it get? It actually got down to only the 78% retracement, which again is the upside of the target area. But at least it provides some clarity on what may happen. So, okay, I'm going to shut up on that, Anil, and jump into, I wanted to share that with you so that, one, it gives you something to practice over the weekend, but also if you've never used the time extension Fibonacci's and the price projection or extension Fibonacci's, it's a great way to provide some additional clarity on where things may be going.
This is excellent analysis.
Thank you. And Ali says, are you saying you first expect a downward move to the 368 level and then a projection up to 410 and then bounce back around? Where's my 410 level? No, I'm not looking for it to bounce back up to 410. On the Fibonacci's, let me grab that Fibonacci there. What I'm expecting is basically my expectations here is we will operate within this candlestick right here, but primarily the body. And since I'm below the 50-day moving average, I'm going to utilize the 50-day moving average as my line of demarcation, expecting prices to move to there if we do any type of a bounce, and then watch to see it. I mean, it could get down to the 50% mark here and bounce, but This is just my longer term projection to the downside, which is this little purple box down here between 344 and 326, happening somewhere between, like I said, the 25th of the 25th of January all the way through the 25th of February. So great question. Thank you very much. So let's go ahead. Anil, thanks. I wanted to spend a little bit of time with that, Anil, just to kind of give people a flavor for, there are so many tools out there to use, but then knowing when to use them is very, very important. And Nicole brought up a question earlier on about, is this what we're seeing in the market right now primarily due to tax selling? And I would say it's kind of a toss-up between, one, tax selling and just the high level of fear and uncertainty about the economy. And what we want to, what we need to do is basically right now, I'm in a wait mode. I'm in a wait mode waiting for to get my setups and my triggers. And I know Anil probably is also, and I know that Anil's stock for this week has actually been doing quite well. Netflix. Tell me about Netflix, Anil.
Netflix, a couple of weeks ago, I got a buy signal on a weekly chart on the triple screen. And I was kind of not believing it, but it just kept on going.
Was that here? About right here?
No, even below that. It's way back around 205.
Okay.
And then I also followed the Chaikin system in designing my Delaware focus list. And it also turned very bullish on Chaikin, which was another surprise, but it just kept on going. And then this morning I heard Mark Chaikin, and he's picking that as a number one stock for 2023.
Okay.
So I don't know how much to believe, but the trend is right and the system looks like it's doing its job.
What is your trigger to get in?
Actually, I wanted to get in yesterday and I missed it. I'll get in there today sometime.
Okay. Excellent. And so, excellent. So, and here is my pick for today. And again, I recognize the market is, like I said earlier, my word for the market this week is nasty. It is just basically, making a lot of people shed a lot of tears out there. And so it is nasty. And so what we want to be doing is basically identifying one. I want to identify a stock that is in an uptrend. So is SANM in an uptrend? Yes. What is it doing? It's pulling back down towards a previous breakout area. Look to your left. What's happened? It has closed this gap. But where's my support level? I've got a support zone that starts at about right there, about the 57.61 level, and runs down to about the 54.57. Or if I want to use the Fibonacci's, I've got a Fibonacci box right here from about there down to about there. So when it's down in those areas, I want to be looking for a reversal signal. Now, do I have a reversal signal yet? No, no, I do not. What would my reversal signal look like? I would like to see it get down a little bit closer to that 50% retracement line, drop into there. Maybe it does a little bit of a bounce here, comes back and retest it. That's a strong entry level for it to shoot on back up, with the stop loss just being immediately below these levels here. So that's what I've got on SANM. The other thing on SANM that I really also like is this. It's got a 99% composite rating. Its relative strength is, so I just draw dots on top of that, there we go, is 97, and its accumulation distribution is an A-. It's And as far as an industry group, it's in the top 3 out of 197. So that's pretty awesome, I think. And I'm just not. So yeah, Allie, it could. However, I want to define where I want to take my risk at. I mean, it could bounce there, sure could. But for me, and I will be paying attention to it. But one, I do not have a reversal signal, and on the chart itself. So, Anil, what do you think?
Could be good. I'm just looking at my charts, and yeah, I always look at the daily and weekly charts on the triple screen, and this one is coming down, but MACD is above its 0 line and still unbroken, so I like it.
Okay, excellent. So, okay, let's go ahead and jump over to. So we got 2 good stocks for you this week, guys. And so, hey, one of the things I promised everybody is that I would basically share 4 lessons I learned as a Navy pilot that will help you trade better. This is the actual a photo of the aircraft that my old squadron flies now. No, I flew the A-7s, which was the airplane before this, but it wasn't a prop plane and it wasn't a bi-wing trade, just plane, just to let you know. But here's some lessons that I learned. One is finish ground school with a qualified pilot. Regardless of how qualified a person is to get into flight school, they didn't just turn you loose on the airplane and say, okay, go fly, go figure it out yourself and all that kind of stuff. You went through ground school, you went through a lot of the other things with somebody who was already qualified. I compare this to when you're trading and learning how to trade, find a mentor. Now, a mentor can be in a book, a mentor can be a live person, or a dead person from a book, but they're going to basically be able to walk with you. One of the good things about having a mentor who is alive, you can bounce ideas off of them. Number 2, always plan for 2 destinations. Well, what do you mean by that, Dennis? And one of the first things we learned when I first started flying, as soon as we took off in the airplane, we started looking immediately for a place to land if we had an emergency. That could be a farmer's field, that could be a waterway, that could be a lot of different things. The second destination is one that we were planning to go to in the first place. So how does this compare to trading? Well, the comparison to trading is very simple. On every trade, you need to know where your stop loss is and where your profit targets are. Those are your 2 destinations, one or the other. Number 3, simulator time before real airplane time. What I find with so many traders is when I was flying, is we literally had to put in almost 3 to 4 hours of simulation time for every hour we actually flew in the aircraft. Well, why is that? Well, one, the government didn't want us to go out there and practice in a real airplane because that was millions and millions of dollars worth of hardware. They would rather us practice in a simulator because if you crash in a simulator, you're not going to wreck the airplane and or kill yourself. So that's a thing that there is simulators available for trading. And I'll put a link there, the AutoPilot, not AutoPilot traded, Thinkorswim has a fantastic simulator called On Demand, and I'll put a link on how to get there, but also a link in the description on a video that I put together to train you how to use that simulator. And last but not least, always follow a written checklist. Sometimes we as pilots, what we would do is we get so used to going through the checklist that we would almost think we had it memorized. And the wisdom is always read your checklist, point by point by point by point. Why? Because if you don't, there will be that time where even though you think you know it perfectly, you'll leave something out, and leaving something out could cause you to crash and burn, which is not a favorable outcome. So if you're not using a written checklist, and we provide some through the AutoPilot trading service, if you're not following a written checklist, you need to start. So hopefully these 4 lessons I learned when I was flying jets for the Navy will help you also become a better trader. So when the market's like it is right now, guys, some of the best thing you can do is just step back, observe. What is the market telling you? Well, you need somewhere to write down what the market's telling you. This journal is absolutely phenomenal. It was developed by my son, Brandon, and is one of the best sellers over on the Amazon. I'll put a link for that also down in the description. So we've covered a lot today, Anil. We've covered 2 great stocks. We've covered a projection of where we think the market is going. Is there anything other things special that you're doing right now to prepare for 2023?
Well, I answered that question. One quick thing. While I was in India, I used to fly single engine plane. And the 4 rules you're talking about were exactly the 4 rules we were thinking about. So thank you again for a reminder.
Thank you.
So 2023, I think my thing is, again, follow the system. The system is right. And one other thing, I have my own trading journal, but I just wanted to compare with yours. So I ordered last week, and I'm looking at that copy right now in my hand, your copy.
Excellent. Well, thank you. Thank you for letting me know that. And I'll let Brandon know also. So let's see. Alan asked a question. SAM has a daily TS True Strength short state, started 5 bars ago on 12 weekly and monthly. And so respectfully, yes, it does. Alan. And one thing, that's why I was talking about, I want to wait until it gets down to that level of defined support where we can say this is where where it should find support. Well, at those price levels is where also, if you're talking about the TSI should also find support in those areas and start to reverse. And so what am I looking for? I want to review my 3-step setup and trigger. So my setup is to have the TSI in the lower reversal zone starting to reverse up, a candlestick reversal signal, and that momentum shifting and be at support. And then the trigger comes is once all those things actually shift. So great question. So Anil, thank you very much. Everybody else, thank you very much. If you have any more ideas, I'm going to share a couple of stories or a couple of true things that happened to me is in the very near future. And one of the things I'm going to share with you is what are some of the lessons I learned from Tiger Woods about how to trade better. And I'll just leave that out there. And I used to be a member at the same golf course as Tiger Woods and his dad, and I was able to spend time watching him and the process that he went through to become one of the greatest golfers in the world. It's something you're not going to want to miss. So, Anil, have a great rest of your week, and we'll chat with you next week, okay?
Thank you. Thank you all.
So, aloha. God bless everybody.